Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market gained ground last week as investor focus moved to China. Everything else seemed to be just noise. Monday saw stocks move down as the U.S. and China tariffs were enacted. Wednesday, better economic data out of China moved the markets up. And then Wednesday night, the futures exploded to the upside when it was announced that, well, the U.S. and China would get together on Sunday to make sure conditions were in September to make sure that conditions were right for them to meet in October then for trade talks. So reopening trade talks, the markets just exploded overnight on that to the upside. And then Friday, as China came out and lowered their bank requirements, the reserve requirements, adding some $120 billion equal to that in the yuan of liquidity that just shoved markets up again overnight. So we had this early weakness in the week, and then markets then started to move up. Of course, tariffs, well, they're bad, and they have negatively affected what are overall very weak economies, well, all over the world. China really weakening in some significant way, and of course Europe, Japan extraordinarily weak. But if you think on these trade talks that China's about to surrender, well, forget about it. I mean, their tactics are they're going to lower the value of the yen to compensate for tariffs, and they're going to stimulate their economy, and they're going to do whatever it takes because their goal is to get power away from the United States, so they're not going to give in to the U.S. This is just probably, I would say very probably, another one of those moments in time where investors get hope, but they're going to end up with more disappointments and certainly more volatility ahead for the markets. In the meantime, it's like somebody flipped the switch again. Short-term things have improved and the market has strengthened. This is going to be a little bit different show than I normally do because I'm going to show you some charts right now because I think it's important to take a look at the U.S. versus the rest of the world as far as the stock markets go. The U.S. has been extraordinarily resilient. Now with the S&P 500 only down about 1.5% from its highs, where the rest of the world has suffered pretty significantly. U.S. market being about the strongest stock market in the whole world. I want to take a look at some comparative charts right now so you can just get an idea of what the U.S. looks like compared to the rest of the world. Let's take a look at 3 comparative charts, and then I'm going to take a look at some weekly charts so you can get an idea. And I'm going to make a point here. After I show you these charts. So you want to get my idea. This may be a little more investor focused than I normally do, but I think it's important because, well, all of us have some longer term holdings, right? At least if it's in our asset allocations, in our retirement accounts. So investor focus maybe right now, and you will, I think, get some interesting insights. Take a look at this chart right here. This is the Dow Jones Industrial Average, which is a good representation of the 50 biggest stocks in the biggest companies in the United States versus the Stocks 50, which is the 50 biggest stocks in Europe, 30 biggest stocks in the U.S. versus the 50 biggest stocks in Europe. And this chart essentially shows you that the United States, the U.S. stock market has continued to gain strength versus the European markets all through this low back to 2008. So this is a monthly chart showing you that. And the U.S. has consistently done better when you look at that. Let's take a look at the next one in here. And you could see here, this is the Dow Jones Industrial Average right there versus China. And you can see this one goes back to 2012, but from 2014 through today, we have seen the United States continuously, our market, do better than China. Now you'll note in here that for basically this last year, the U.S. market and the Chinese market relatively have been kind of tracking each other. So the U.S. losing a little bit of its overall relative strength. And one more I want to look at, if I could pop this in clearly for you, is the Dow Jones Industrial Average versus Japan. And you can see here, if I go, this goes all the way back to 96, but if I just look here in this period of 2006 through 2019, you can see the same thing. Of course, the Japanese market languishing and their economy suffering from 30 years or so of them messing with the markets, and that shows you the U.S. market extraordinarily strong versus the Japanese market. So you can see it's very clear when you look at those major markets, Europe versus the U.S., and the world markets versus the U.S., you have a situation in here where you have a lot of strength in the United States markets versus the market that we're looking at in the rest of the world. Let's take a look at the SPDR, SPY, and this right in here will look at the U.S. market, and you can see in here, based on our cycle analysis, that the U.S. market is immensely strong. You can see the SPDR is now moving up towards that all-time high, and now only about 1.5% from that. And our cycle analysis is suggestive that in September, late September and October, potentially into early November, there is a pretty big declining phase due. So we think that this rally we're getting here in the stock market will not hold, though it potentially could test that high that we had there. It's going to move into a time period of a lot of weakness. But let's compare that to some other markets that we see in here as we switch over and we look at the markets that we just talked about. Let's look at the world market, the VT, and you can see in here, I think I showed you the world market on the monthly a second ago. I don't know if I labeled that correctly, but you can see here that it almost broke down, and here again you get this big rally right there going on this week, but we're moving into a time period into late October, early November, where there should be one more big decline. This almost had a big breakdown in here, and you could see as far as the world markets go, this VT, the peak here in July of 19 in the S&P 500 and the peak in in September of 18 were below the all-time peak, so the world markets significantly weaker than the United States, and a decline due into late October right there. That is the VT. If you take a look at the FEZ, which again is the stocks 50, you can see here that that is another market that looks like another big decline is coming. Look at where these two cycles come down right over here and the two come down right over here. That's called a nesting in the cycle analysis, and that says to me that this is likely a time period where you will get some big final declines in the patterns. And here you go right over here. We're looking for Europe to have a move down. Note, this one actually did break down. So this rally is likely a fake. It's this minor cycle rallying right in here. And then this period into October, November, where it's likely to have a big decline. And one more as we look at these, EWJ, you can see that right in here. And the same thing. This got down to where it tested that important low. It has a rally, but this likely to fall and decline into late October, early November. So what did I just show you? I showed you the U.S. compared to world markets being just incredibly strong. The relative strength of the United States to the world markets, or Europe or Japan, any of those, has been incredibly strong. And has continued for nearly a decade or more that you could see in there. It's been a continual period. You think that that is likely to continue? All markets that we see likely to have a big decline. Something sizable that gets you back to the recent lows between, we'll call it mid-September, late September, and into early November. But then there's an opportunity there because we see that as an important buy period. And we've thought that the stock markets would have an elongated top being formed. And that, when you have inverted yield curves like we've had, that usually just is a little warning, and then the markets can hold up for some period of time after that. So we have suggested in recent month or so that we would get a rally in the U.S. market towards the end of the year that lasted into early 2020. But with what we showed you right now, the U.S. market, in our opinion, is exceptionally overpriced compared to the rest of the world. So you as an investor, do you want to be buying the U.S. market, or do you want to be buying some of these other markets that are likely to be bottoming in this next break? That's really what I wanted to show you, potentially as an investor or because of some long-term holdings you might have. Certainly, if the market does get a break, and if you wanted to lighten up ahead of this break that we have right now and the likely to come in the U.S. markets into this fall period, that makes sense. But then do you want to buy U.S. stocks? I don't. I think that these foreign markets are the one to be looking at, and that you're likely to get a better opportunity or a better risk reward, as if the markets do fall in a much harder way, that those markets that are pretty depressed will not be the ones that will move sharply lower. I think that they will be more resilient, and compared to the U.S. market, well, I don't think that they'll do. I think the U.S. market will not do as well as these foreign markets we're talking about. And there may be even a pair trade in there for those of you that are more aggressive, buying some of these world markets and shorting the U.S. against it. Just wanted to bring that to you. I hope you find that valuable information, and unusual for me to bring that kind of charts to you. For this week, the stock market, the index is up between 1.5% and 2.5%. Bond market down about 1 point, and it was doing much better, but then had a big reversal that had the 10-year yield down to 1.43%, and it closes around 1.55%. Still an incredibly low number, and it's up about 5 basis points on the week. Gold market made a big high at 1566, and on that trade news had a very big reversal. The silver market plunged on that news. It was wild. Gold down about $5 on the week, nothing significant. And silver, which has been an immense tower of strength, and I'll show you a short-term pattern in that towards the end of the show, a huge reversal. Off from its high, $1.25. That's a tremendous volatility that we saw in the silver market. And boy, if you want to trade something that's wild, it's that market. Dollar down about 0.4% on the week. It also reversed, an unusual condition where you have a correlation between gold and the dollar being positive. In other words, they're tracking the same. And the oil market gets about a $1.40 bounce up. And that came on the China stimulus. If you like what you see in here, give me a thumbs up as you go to YouTube and become a YouTube member. And also follow me on Twitter at askSlim. We're going to be right back, and I'm going to bring you a bunch of stocks in the best and the worst for the week. All right, this is the best and worst for the week. I'm going to bring you 5 stocks that are the best and 5 stocks that were the worst for the week. We look at weekly charts, For our members and for anybody out there, there is a great opportunity to learn this type of analysis, cycle analysis. All you have to do is go to our website and you'll be able to see our cycle analysis workshop. Go to the workshop tab on the top of the askSlim site and take a look. There's a video there on cycle analysis, and you'll be able to get an idea about our 20 video module workshop. You'll never look at charts the same, and I really want to encourage you to go there and look at that. And while you're there, take a look at the other workshop we have up there. It's 6 modules. It's called the 5 Essential Building Blocks to Successful Trading, and you'll be able to see the information on that there also. And that has a truly a psychological overlay. In other words, looking how there are personal obstacles in the way of our success. That looks at each of these building blocks, the role for trading in your life, the building emotional fitness, getting a good match for your trading style and method, talks about 6 areas of discipline, and building a trading plan. Those are the 5 building blocks, and I think that you will learn an absolute ton. So please go look at those 2 workshops, and you will have a great opportunity to advance your skills and raise your profitability, of course. All right, so let's take a look here at the 5 best stocks for the week. We're going to start out by looking at TPR. The gainers in this week were notable. There was about 18 or 20 stocks that out of our 300 that had gained 8% or more. So those are pretty sizable gains. Now, there were some stocks that bounced that were pretty depressed, and buyers are just simply looking for stocks that are depressed. And then there were some stocks that just have some beautiful patterns, and I think you're going to see both of those looking at these 5 stocks. Here is Tapestry, TPR. This is a Coach, and the old Coach, and this is just a pattern that really shows you our cycle analysis, or what cycle analysis actually looks like, in that at the bottom you see the cycle brackets. These are just guides. They help us see the rhythms in the market, the repeating patterns. This big cycle right over here is made up of 2 half cycles, and then you could see the 2 half cycles right in here. The same thing right here, and then they bottom right there. So you see the bottom comes in, and then you get a rally phase, and the bottom comes in, and you get a rally phase. This comes pretty much on time. When you have a negatively configured cycle, in other words, it closes lower than it started, the odds are pretty good that the next cycle is going to fail in some resistance area and move down again. So we've put this in with our swing high, swing low analysis, and you can watch some videos in that in our 400 video library. And that says to us that while the stock is now in a rally phase, it's likely to have problems right in here. The CEO left. So he quits, and the stock is down 60% off of its highs, so investors are happy. Of course, the CEO quit right in this rising phase, so that's a perfect timing for them to say, well, maybe the next CEO will do better, so you get a bounce. So we're looking for a move up in this stock, the resistance area between 25 and a quarter, and up here the highest level maybe 29 and a quarter. So 25 and a quarter, 29 and a quarter, that's our target zone and sell zone in this stock. It gains 15% on the week, and the best gainer in our 300 plus stock universe. Navistar next, NAV. And this is a very nice bottom in there, up 14%. They had a huge earnings beat. Revenues beat, and analysts both downgraded and upgraded this stock. Now, again, I want you to really learn what the importance is of the timing of the cycle patterns. When you get that big upside week that you have there, and by the way, that is a morning star formation for those of you that look at candlesticks, when you have that on the first week up, the chances are pretty good that it's going to have more time on the upside. So you can see here's your first week up and it rallies for 3 months. First week up here and it rallies for 3 months. This one first week up and it failed after 2 months. But look at this. You think that this is going to fail now? Not likely. The question in my mind, is it going to fail in the resistance zone over here, or is it going to plow through it? But with this massive improvement in earnings in Navistar, I think that this is going to be the beginning of something important. Truck engines, trucks, this is their business now. Remember, they're no longer in the farm business. And this is potentially the beginning of what I will call a basing cycle in here. And to me, this really could be an investable stock. I mean, they're finally getting to the point where they can earn some money. And the first week up, that's really a good pattern. The next two stocks are related to each other. Western Digital, take a look at this. Western Digital up 12% on the week. Multiple analysts have upgraded this stock, and we agree. Now, if you look at the cycle analysis in here, this is known as a basing cycle. In other words, it had this big break here from 107 to 33, losing about 2/3 of its value or more, and then gives you this base right over here. In other words, you finally made a low here, and then the next cycle low did not break it. It got close, but a clean base. Then when it got above this high right over there, that says that the cycle is turning positive. Now you're beginning to trace upward, as you can see, opposite of this, which is tracing downward and negative. So what that means is that the major downward cyclical component, or the directional component that drove the stock down, was changing here on the base, and now you could see that it essentially is heading higher. So if you had a downtrend right over here that was pretty visible right there, you can see that what is now changing is this is now becoming an uptrend. So you have this upward pattern right there, and now this one starting right in here. That is an uptrend that is beginning. It makes Western Digital very viable. This one, we would say if you get this little dip, now remember, we look at cycle timing, and these two blue spikes are the low timing. So it says to us, a little dip in here, you can buy it maybe in the area of 54 to 57, somewhere in there, and then be moving up pretty sharply. So we're going to look for it to get some kind of a dip and then move up. This, in our opinion, is very viable. And a stock related to it is Seagate Technology. These are stocks that are, in the hardware peripheral category. Look at this one. You can see, again, this was a better, stronger basing cycle right in here. Negative cycle right here gives you a big head and shoulders. Here's where the measurement is, and it comes right down to it. Positive cycle, a very likely positive cycle. Again, looking for it to complete this pattern by coming down. You'll note that earlier in the show we talked about declines in all of the markets into late October. These stocks, both of these, Western Digital and Seagate, align with that, and these are very viable, in my opinion, in a decline into this fall period. Note that this pattern right in here threw off this fib target zone, and it comes right up to it. It'll probably get into it and then get some kind of a pullback into October, and then very viable up to recovery highs, very likely into late part of the year, early part of next year, all in alignment with our bigger picture analysis of the stock market. Cash tender offer that this one did for some of its securities, a very positive pattern that we can see in there, in our opinion, very viable. Dollar Tree DLTR is one that had a big upside move. This one was feasting on the potential for recession. You can really see that big upside move here that was occurring as the market was actually moving down and struggling. I don't think this one has got a lot more upside. Recessionary fears likely to go away for a brief period of time in here, and you can see getting back up to where that old high was. In a negatively configured cycle, the probabilities of breaking this high are small, and we think that this stock getting up to this level is actually a sell. That is a look at some of the 5 best stocks that we look at, and we'll be right back, and I'm going to show you some that well, didn't do as well. Well, last week, while lots of stocks were working their way to the upside, as I said, lots of them had pretty sizable gains. We had a few stocks that were able to move to the downside, and notably, Cliff is one of those. Cliff is a stock that's been under a lot of pressure, and that's during a time period when materials have actually done well. They were smoking on the upside, right? So this look here at this stock is a little odd, and as the stock kept moving down. But I want you to note, once it got under this level, that was a breakdown, and the cycle pattern suggested that it was going to move down into September. Now you can see the hammer bottom that formed right there. That says that low right around 665 is likely to be the low. This dashed line is DBB, which is the base metals, due to make a bottom sometime in late September. The same thing for Cliffs. And this hammer says to us that the next time, or as it moves potentially lower to complete this pattern, it's likely a buy. We're going to be looking for this stock, which is down 8% on the week, to actually be making a bottom in the next few weeks. And we think that Cliffs is one you can look at as buyable and likely to outperform. Sienna is the next stock we're going to look at. Sienna down about 5% on the week, getting into a support and what we consider to be a lower buy zone. Earnings came out good, but their guidance on margins was not. Now, analysts were mixed on this. Some of them raised targets, some of them lowered, and we think there is still some more time in here. So it really needs to hold above this level to be buyable, and this is about 6 weeks' time, moving you, yes, into this declining period into late October. There are a lot of stocks that have this setup, and that's why I believe that what I showed you earlier in the show, that the market will move back to the downside into late October, early November, I think it's consistent with a lot of individual stock patterns. Sienna has got some time to decline. As long as it can hold above this, well, near 36 level, 35.80, then I think it's going to be okay. It's in this lower support buy area. We're not going to be looking for a big decline in there, but you can see in here what's important is that this is the whole moving average, and you see when it turns over, you get into these final stages. Here it just turned over. So intermediate momentum is looking weak. And this one we're going to look for it to get into that area close to 36 bucks over these next several weeks, and we'll see if it can hold in there. But analysts in here mixed, as we said, and earnings didn't look that bad. So we're going to not look for any sizable declines in here off of this. The gold market had a big reversal. I'm going to show you one gold stock, and you can see that right here. And this is kind of a tell, and based on what I'm going to show you in gold later in the show, this looks like a peak to me. But what's really interesting in here is that note the giant inverted head and shoulders that formed in here. Now, cycle patterns build inverted head and shoulders. I talked to you about looking at the workshop. There's a video in that workshop out of the 20 that talks about how cycle patterns create these patterns. And when you get into these rising phases right over here after an inverted head and shoulders, that's when you can get the breakouts. And you see the neckline breakout right over here. Here was your measurement right there. Bullseye, and then you get this sell signal. It says to us that, well, Barrick Gold is kind of in a period where it's likely topped. Now, this one, of course, tracks gold pretty closely, and we would say that there's more tests of these highs or higher prices coming in gold. And while this looks like a top formation, patterns suggest that it's going to bottom in here and then get another move and test those highs. So we actually think here in the area of 17.5, 18, it's buyable for those of you that are aggressive traders for a move back up to that level around 20. It's about a 10% gain and probably worthy of a trade in there. And again, it looks like overall topping for the bigger patterns, but we're not ready to say it won't take out that 20 high in there because we're still positive on the precious metal market overall over the longer term. JetBlue is the next one we're going to look at, and that is JBLU. I don't know what I just typed in there. And this is just gorgeous. I mean, look at this incredible look at these cycle rhythms. Each of these is called a cyclical harmonic family. So this is the dominant and the minor half. And you can see each of these minor half cycles perfect. This minor half due to bottom right in here. But note the breakdown right there. When you get a breakdown in the minor half, it says to you that the next rally will come and fail in a big way. That happened right over here. It happened right over here, though that rally was pretty strong. This one did not. This was a positive pattern that you can see. So what that says is that JetBlue likely to get a move up. This is a sell zone there between 1760 and 1850, and then likely to get a move down into the low timing that we have right there. You can see the clarity in these charts. I want you to note this stock was on my list of best for 19. That looked really good as the stock had moved up from $16 to $20. Sizable gains. However, now it doesn't look as well, does it? Well, we'll see what happens in the next year, because this says the stock doesn't have much of a future between now and December. Rally coming in here over the next few weeks, and then it looks like a sell. And the last one we're going to look at, and this is very notable in that it is acting very, very weak, and that is Netflix. Now you can see the stock not doing anywhere near as the stock market did as we had this big upside move. This is an intermediate support zone it's in right now. Here's your cycle timing. In other words, there's a low due right in this period. You can see the low due right here, the rally, the low due here, and the rally, the head and shoulders top, and not quite making the downside measurement. Double top right in here, and then moving down. Let's take a little closer look right in here. So what happened? The stock is relatively weak. This is where the low is expected, timing-wise. What happened was that, well, your favorite TV tout on CNBC came on there and said it's his least favorite thing. You know who I'm talking about. And we think the bottom is near, and then a bounce comes that fails. We have talked about the competition in here. We've talked about them raising their prices, and I think growing subs relative to the competition they're getting out of Disney and Hulu and Roku and Google, and so many of them, is just overwhelming this stock. We're going to look for a bounce into this period right over here, which may not last as long as we've given it credit for, and then moving sharply lower again. I could see the stock at 250 after trading maybe up to about 300 to 320. So we're going to look for this bouncing period over coming weeks, and then a big decline. And I think that you know who is going to end up to be right on this one, but I think his timing is bad saying that, and that you're likely to see a bounce coming right now. So Netflix, we've been bearish on the stock. We think we are right, and we think much lower prices are coming into next year in Netflix. That's it for the worst 5 stocks for the week. And I'm going to be right back and bring you my short-term view for the coming week. All right, short-term view for the coming week. Do this every single week, except for last week because I was on vacation. So I don't have to be accountable to anything because I was away. And we'll take a look here. Of course, I look at daily cycles when I look at this. So it's the daily charts, and that gives me an indication. I can learn a lot out of the daily charts of how they are working with the intermediate charts, the weekly patterns. That's what we do, look at multiple time frames and try to make sense out of all of these waves that we see in the market to give us our highest probability in our analysis and, of course, for our trading. So we're going to take a look at light crude, and then we'll look at gold, the dollar, the bond market, and the S&P 500. We're going to mix in some other things this week because I think they're important to the conversation. First thing we're going to look at in here is the light crude market. And what we're looking at in here is that this bounce is likely to fail. So we think that light crude is going to be range bound for the moment. The intermediate patterns are not great. Momentum in here negative through here, then turn neutral and remains neutral. When you see the slim ribbon like this, choppy, it's a tell. And that says to you, well, there's no momentum in either way, and that tells us to start looking at ranges. Well, we see a range in here of about 57 up over here, down to about 53 down here, plus or minus a few pennies. And we think that the next week is going to be on the downside as we stay in this range. See that shooting star when it tried to get over 57? Well, that's not a good thing. It tells you there's resistance up there. You could see the engulfing pattern at that level right over there, a little evening star at that pattern right over there. So you're getting some resistance up in that 57 area, and that's what we would expect. Still, this lower support area is giving it support, so we're giving it a range. We think it's going to move down towards the bottom of the range this coming week, and we think light crude is shortable for aggressive traders, those that like to trade futures. That's a look at the light crude market. We'll call for a down week this week. The next thing we're going to look at is the gold market. Now, a note to our level 3 and 4 subscribers. I have struggled in here to try to understand this pattern and on the short-term basis and try to get it more understandable with how silver is trading, because silver has now become the driver. We had that target zone up there that was up over 1600 and it didn't make it. Doesn't look like it's going to make it now. And now we've been in this period right over here of where there should be a correction. Now, it's been incredibly resilient in here. There are a lot of buyers out there in gold. Very interesting is a new gold Bitcoin is coming, not Bitcoin, a new crypto is coming out, which I think is just a brilliant idea. Of course, I thought about it a couple of years ago, so it was my idea, but they're doing it. So I think that between the huge buying that China's doing, there's not going to be a lot of downside here in gold. We're going to see some corrective periods. This period right over here now looks like this little corrective period is nearing an end, like there's a couple more down days potentially. We're going to look for a range also in here. So we don't think it's ready to make any significant move on the upside. Silver is in more of a corrective period. I'll show you that in a second. And this looks to us like maybe a little bit down right over here and then turning up. We're going to call it a small up week for gold. Bottom of the range. Now we've raised the range in here again, 1500 right there up to about 1560, 1566 up there. And we're going to look for a dip and then rally here in the gold market for a small up week. Now, I don't usually show silver, but silver is the driver in here right now and really moving markets. So /SI. Look at this wild topping pattern right in there. Now, silver to us, it's hit the support zone, and we think it's likely to get a bounce off of that and then be moving down again. And because we're getting into this corrective period in silver and this big reversal, that is likely to weigh on gold. So even though gold looks to us like it's range bound, I think the upside is going to be limited by this silver top that we see in here. It got wildly crazy on the upside, making it up near 20, and the moves were just extraordinary in size, and we think it's going to rebound in silver and not be able to go. I'm showing you the weekly pattern in here, which I don't normally do either. Just want to give you a lot of information. And look at this giant shooting star in a pattern that looks, well, overall quite bullish. So we think that when this corrective period is over in silver, we're going to get another up move again. That's a look at the weekly pattern in silver, the daily pattern in silver, and man, if there's anything that looks very tradable on a daily basis, it is silver. It is a wild market in there, and you've got to really be able to have some cash to do that one. So that's a look at gold and silver. We're going to call gold /GC having a small week to the upside, as you see right in here, projected. So next thing we're going to look at is the dollar. This is a rare time, and that is the dollar and the gold market are in sync. Usually they trade inversely to each other, but we're looking for a gold bounce and we're looking for a dollar bounce. We're going to call an up week in the dollar. Momentum positive, as you can see right over here, in the dollar market. I didn't mention that, but I'm going to go back again to the gold market because I want you to see the rarity in here. We have positive momentum in the gold market also. So positive momentum in gold. We have positive momentum in the dollar market, and those usually are counter to each other. We're going to look for the dollar to move up this week in this positive momentum, test that resistance zone that we have in there. Now I have two scenarios that you can see. They both to me suggest a topping in the dollar coming up in here, but one of them is failing at this resistance, one of them is testing the old high. I honestly don't know which it's going to be. We have to see what kind of strength comes in the dollar, but the only way the dollar is going to be able to get back up to that high is if the U.S. stock market collapses or something happens with trade talk, because this move is all based on a flight to safety. We're getting a safety bid in gold and the dollar at the same time, and that's likely not to remain. So we're going to look for a bounce in here, and I would say the lower track is the one that has the higher probability in here. So we think the dollar is going to rally and then fail. We're going to call it an up week in the dollar, probably on the small side, testing that resistance zone, which is 98.70 to 98.90, and we doubt that it's going to be able to hold that level. /ZB, we're going to look at this one. Man, this is turning out to be a long show, isn't it? I can feel it. This you can see there as a breakdown. Now, it's a short-term breakdown, but it does suggest that this minor cycle right over here bottomed a little bit early. It rallied and then got below this level right over here. What that is suggestive of the fact, well, it's more testing the low that on the roll that jumped. So I'm going to move that just so that we have good, accurate information. There was a roll in here, so it jumped. It didn't quite break that down yet, but it looks like it's turning down. Okay, that's more like it. Okay, I don't like when I have bad information on there, so I'm going to fix it. That's more like it. It's testing and rolling over, and I think that is going to mean that it's not going to be able to get any rallies that hold in there again unless something very bad happens and the safety bid comes back. So I actually think that the odds are pretty low that you're going to get the bond market be able to rally. And again, something different that I don't normally show you. Here is the TNX on a daily chart. This is a cycle analysis on the daily chart on the 10-year yields. And you can see that it's just starting on the upside in yields on this pattern. When I see that, it says to me it's not likely, as yields are likely to go up for, well, another, we'll call it, week or two at least, that the bond market /ZB is likely to be able to get anything significant on the upside because they are inverse to each other. We think if the bonds tick up, they're a sell, and that we're likely to fall into this zone right over here, which would then be our buy zone. We're going to look for a price below 160. We'll call that 159.30 in the middle of that target zone over these next a few weeks. Choppy market likely, and then turning lower. The risks are to the downside in here in the bond market. We're going to look for more of that. So the stock market took on a better tone. It caused us to look at the short-term patterns again and to analyze that in a way that says, okay, the market's not exactly doing what we expected. It's stronger than we expected. And then what does that mean? So that has us looking, we're always going to be as flexible as we possibly can. We want to take all of the fresh information and then project out based on what we see in here. We had believed that the stock market would fail on all of its rallies and then have a sharp decline and then rally again and another sharp decline. Well, that hasn't changed. We expect it to move down and then up and then a sharp decline. But the overall pattern or direction of the pattern has changed. So we have a revision in here for our members for them to see when we make those changes. So you see this blue dashed line on the bottom. That is the revision. We went from what was an 18 bar cycle to a 20 bar cycle, and then the minor cycle is a 10 bar cycle. So we made that change in there. It is a small tweak. However, you can see that it changes the direction of the pattern. So instead of the bigger decline that we were looking for in here, we only expect a minor decline into this support zone. Now, when I look at implied volatilities, I want you to go watch our Future Speak show, where I look at the VIX analysis, and it's suggested that there is a low in implied volatilities due around the third week of September, right around September 20th to 24th. So it says to me that this pullback that we're looking for in the next week is likely to get support in this upper support zone and then move back up in here. The key is, how much do you get down in here? And then how strong is this rally? This rally in here, based on this cycle right in here, could test the all-time highs. If you get a close above this area around 29.83.84 on that 78.6%, then you're going to end up projecting up to the old high up here at around 30.70. So 30.27, sorry. So that's the way this changed. So we're going to look in this next week for a minor decline. We think support will come in either at 29.48 or 29.25. That would be a minor decline in here. And then that hitting this support zone and getting another rally that takes us up into the third week of September. After that, remember the beginning of the show when I talked about markets turning down and potential sharp declines into late October? That's this out over here, where this turns down and then has about a 5 to 7 week window of time of a lot of risk. This is the period where high risk begins. This right now is a period of chop and potential higher prices. I think it's unlikely, it's a low probability that you get up to that 30.28 area. However, with the double gap that you see right over here, it's actually a gap and then a double gap. That is a very powerful pattern. The market has changed in that way, and we must recognize it. That's why we call for a minor decline in this period and the potential for a stronger rally out over here. We have to look at what we have and say, what are the highest odds? And that's what we're doing right in there. And you can see that. We're going to call the stock market down in this next week, but coming down and testing those support numbers and then moving up again. If you've been short and looking for the market to move down, well, that's me. That's my story. And I lost money during this rally these last couple of days. And of course, taking losses and moving my positions smaller because I want to be able to just get out of the shorts because the market's telling me it's not right at the moment. So as an active trader, that's how I'm going to trade it, and then look again for that third week in September as the time to be more ready to put on some aggressive shorts again, if the market then does tell us at that time. So a little dip coming in this next week, and then a potential for a higher rally. Again, if we close over that area of about 29.84, it again is going to tell a more positive picture for the near term, just for these next several weeks. No matter what happens in there, that period of late September through early November is going to be a very risky period where all the markets should be moving to the downside based on our analysis. that I've shown you here. That's it. I hope this was a very informative show to you. I showed you much, much different things than you've seen before. Do become an askSlim member, because we have a big team here that's bringing a ton of stuff to everybody, and you really, you'd be amazed to see all of that. This is just a pleasure to bring to you. I want you to be exceptionally careful, because it is so crazy out there. We're always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.